Okay, good evening guys, this is the banker here from grouptraders.com. I'd just like to run you through a trade I did yesterday. It's on cable and it's what we at grouptraders.com call the London close trade. Basically it occurs when there's been a large range for the day. It's around about the London close, which is between 4 and 6 p.m. London time, which is between 11 and 1 p.m. US Eastern Standard Time. I like these types of trades because liquidity is lower. Most of the London traders have packed up shop for the day and have made the money, taken their profit, and have gone home. The phrase taking their profit is quite relevant because these London close trades I tend to like to take after a very large range. Now the average daily range, historical average daily range on cable sterling dollar is 140 pips. Anything above that can be considered large. So when we're getting up to 175, 180, 200 or more, then I am definitely looking for reversal trades. And here is one. It's not the best in the world, but it's a decent illustration. This is the 15-minute chart. And here, where you'll see my cursor, is Friday the 11th of July. This is the weekend, and this is Monday the 14th. Here is the high on Friday the 11th, which is around about 199.55, 56, something like that. Okay, so this is overnight Asian, Monday morning, and we move up. And the range, I can tell you, is the middle. It's around about 140, so average. So we're getting into it, good size range. The time around about here is 3:30 actually UK time, and we're moving on 3:30, 4 o'clock. So it's about the right time for the London close. Okay, and there are two things here. Here is the high, and again we're looking to challenge. We're moving up, so it's not happening quickly. We can watch this happening. We're moving up and we're challenging the high from Friday. The second major point is this diagram down here. This is MACD. This is the histogram, and I like to use something called MACD divergence. This is when the price action is moving equal to or higher, and the MACD is showing lower. And I'll get my little drawing line out, and I can show you. There we go. You see that sloping down line? That is MACD divergence. The price here is going this way, or it's equal, and MACD is moving down. So this is giving me the indication that there's a potential reversal on its way, and so it happened. I'm going to zoom down to the 5-minute chart. This is here we go. Let's find. Here we go. This is it here. Good, moving up, and what I'm looking for, again, actually, look at this divergence down here. So that's on the 5-minute chart. So that's a very good indication as well. And what I'm looking for is exhaustion. We've had the range, divergence. I'm looking for people going home and taking their profit. Okay, so what happened? I got into a trade around about, probably a little bit early. I think I got in around 40. But I'm not a top picker or a bottom picker. I'm just trying to make the right calls. So I got in half a lot there. It moved against me. I got in again at 47. So I'm in one full lot with an average price of approximately 42, something like that. In fact, it moved against me a bit more, and I got in again. It went up to 61, but I got in again at 57. So I'm short 1.5 lots at 50 at an average price of probably late 40s. I think it was 49.50, something like that. Okay, and the price moved down. I didn't take it straight away. It came up against me, and I took it around about here. So I took 20 pips out of this trade. 20 pips. For me, these are quite safe, and the reason for that is we've had the range. We're at the end of the day. There's big resistance here. It's a double top. I mean, there's 3 or 4 good reasons straight away. There's MACD divergence all over the place. Also, I'll just draw your attention to one more thing. This is CCI here, down here. There's also divergence against the price there. See that? And stochastics here is moving downwards. So I've got about 6 confirming indicators. I tend to like a trade if I can get 3. I've got 6 here. The biggest ones for me are the range has happened and the MACD divergence. And let's see what it looked like on the 1 minute chart, just for information purposes. Way back here. I need to get to the end. Excuse me. There, this is it here. This is it, and you can see exactly what I mean. Average price was around about 50. So, and I got out on this spike down here. So, perfect London close trade, and these happen 3-4 times a week. Nothing's guaranteed, of course, and in fact this one was only 20 pips. I've often taken between 40 and 80 pips on these. Sometimes I've taken off half, moved my stop to break even. In the morning I've woken up and it's got me 120. They're just lovely little trades, or big trades. I make a lot of my money in the afternoons and in the evenings. I tend to stay away from the choppiness of the late morning UK session and early New York session. The Dow's opening up, the FTSE's all over the shop, the traders are out at lunch in London, and no one can really predict things. So I like to take these trades. It's quieter and almost when nobody's looking. I don't want people to know what's going on, and I'm quite happy to do it quietly. So I hope this is a reasonable explanation. Any questions, please feel free to ask. An email at admin@grouptraders.com. Alternatively, you can visit the website at www.grouptraders.com. There is a form there. You can submit questions, and what we actually do, we have a trading room, and we in that room we have members, and we have 3 of us who are very experienced traders with a combined trading time of 15 years, and we make trading calls, and we educate and share knowledge. And in fact, our current members are very pleased with the way we're doing. So feel free, send us an email, and we can explain more of these types of trades. Thank you very much, and good evening.